Welcome to FX Street. Today we're going to be talking about crypto.com coins jumping 25% towards 55 cents. But before we dive deeper into the technicals, please make sure to subscribe to our YouTube channel and follow us on Twitter at FX Street Crypto to be updated on all the trends in the cryptocurrency market. If we look a little bit further on a daily basis towards crypto.com, we will see that currently there has been a bit of a worrying signal, and that is the fact that we saw a clean break overnight on the famous trend channel, which has been in place since March 15. We already had 2-3 tests on the downside, but now it closed just briefly above it, and then we opened this morning below the green ascending trend line, and since then it has been gapping open to the downside a little bit. All in all, you could perceive this as being a very bearish signal, but on the other hand, if you look at the RSI here below, you will see that it has been trading very narrow near the overbought area and is coming off a little bit now, which is quite normal. So we see some profit taking after this very lucrative rally we've had all the way throughout March in still a very difficult background situation in global markets with the Ukraine situation. So I expect rather now to see a sort of a pattern being unfolding, and that is the fact that, here we go, to see a drop back towards those 44 cents handle, and then afterwards we will see a full completion towards 53. Let me even possibly, let's say 55-ish, because that then coincides with the top we had here on the 10th of February. So by this, it means as well that we will be printing new highs for this year, or at least for February, as we still had a few higher up in the beginning of January. So for at least as of February, new highs to come. Once the price has been cooled down a little bit, found support, and that support is there, that you can see with the monthly pivot flatlining together with the monthly pivot from the month before around 44 cents, and just below there at 43 cents 84 you have another historic pivotal element here, which, as you can see, has been very well respected in the past, although a bit choppy from time to time, but it's there and it needs to be recognized. And next to that as well, the 55-day simple moving average just below there at 43 cents and 20. So a sort of triple belt being present. So it's either this, or it could well be that we see a little bit of a false break towards there. If those three don't do the trick, you might even see this performing with the 76.4% Fibonacci level at 42 cents 43, providing enough support. So 1, 2, 3, 4 reasons for support, and then we can see a sort of bounce upwards above the green ascending trend line all the way up. Reason why this is such a strong bounce up is because of the fact that investors will certainly will have these levels marked up and will be more than interested, as it's actually a perfect fade-in trade, and then simply sit on the position and let it run all the way up towards 55, 56 cents. To the downside, could well be that this overshoots, and then we might see a full pairing back towards 37 cents, which brings us back to the low of 22nd of February and the 7th of March. Some negativeness could come from further tightening of the Feds or the EU sanctions, for example, which can come out more severe than that has been communicated thus far towards the markets. That's it for crypto.com coins. Please remember to subscribe to our YouTube channel and follow us on Twitter at FX Street Crypto.